Morning all, it's about nearly 3 a.m. in the UK on Friday the 5th. I'm up early, we've got a lot going on. So this is oil. Oil absolutely rocketed yesterday. I didn't expect that. I thought we were forming a head and shoulders pattern, but that doesn't matter anymore. We rocketed up, new high for oil, and that seems to have triggered all sorts of reactions. Refocuses on the outlook for inflation, with commodities going higher and the interest rates on 10-year yield heading back towards last week's high, which is at 161.40. Today we're at 158.30, clearly in a very strong bull trend. So we'll see if yields break above 161.40 today. A close above there on a weekly basis would obviously be positive for the yields. And most excitingly for me is the fact that this seems to be spilling over into a stronger dollar at last. This is something that I have been waiting for so long. We have been in this sideways pattern for 3 months. It's been driving me absolutely berserk because you get moves where you go, here we go, up, big up day, big down day, big up day. Then we do nothing. Then we have a big up day. This is just so difficult to trade when you're seeing big red candles followed by big blue candles just going absolutely nowhere. You can't hold a position for more than a day or two. You get a decent move up for a few days and that's just reversed. So this isn't the way I particularly like to trade. I guess it's because I'm maybe a lazy trader. I like to just jump into the beginning of what looks like a good trend, jump in, keep adding as we break to new levels. And it's just a nice easy way. You just sit back, let the position do the work for you. You're not in and out on an hourly basis. Now, you know about this. I've been harping on about the Fibonacci and 100-day moving average resistance at around 91.20, 91.30. Well through there. We rejected it obviously earlier in the week, but well through there. Big blue candle. This is to me a very strong buy signal. And if you were following me on my chat room during the day, then you will have probably already jumped into a long dollar position. You should have done. I was buying it very quickly when I thought we got up to, once we got through 91.40, that was my buy signal. So we were selling the Aussie dollar, we were selling the euro dollar. I've also sold cable, and it all looks pretty good. And obviously, I've been talking about a short in gold. I've been shorting gold for quite a while. I must admit, I got frustrated with this on Wednesday. It broke lower and then bounced back and went sideways, and I just got frustrated with it and got out of the short position. But this should resume. We've got a little bit of support around 1688 from a Fibonacci level. It does seem to be holding. If we're really lucky and it bounces back, then I will be selling it on a rally. But if it breaks below 1680, I think that would be a sell signal for gold. I don't see any reason why it will bounce, other than the fact that it's getting oversold. There's a bigger 38.2% fib at 1680, so a break below there should see this sink further. Okay, I'll leave that one for now. So Aussie dollar could be beginning a bear trend. This could be right at the beginning of the bear trend where we hopefully are already short, or if you're not short, a break below 76.91, the low of this Thursday, Friday dump last week, should trigger further selling. That would take us well below the 77.16, 23.6% fib, which is kind of the reason why we've been hovering there, I think. So let's see, am I right? Is this the beginning of a bear trend? If it is, we're getting into a short at a very early stage. Kiwi, we've also got what looks like a negative breakout, this trend line going back to mid-December, so it's almost 3 months old, and we seem to have broken that yesterday, certainly broken it today. What have we got? February lows around 71.33, so a break below, break below 71.30 would be the next sell signal. Today's lows at 71.54, but I'm going to suggest that this could be beginning a bear trend as well. Euro has been horrible to trade. I've almost given up trying to find decent levels on it. Look, through February it was just impossible. Pretty much a mirror image of the dollar index in itself. Here was where I thought we might get a decent move, and it was. I thought this was a breakout point. It wasn't a breakout. We rocketed up, and the next thing was closed almost unchanged, followed by a big red candle. So it's just been very frustrating. Anyway, now we're back below these trend lines, which go back quite significantly. This one here goes back all the way to June, and it looks like that one, anyway, that's definitely been broken. They've all been broken. 100-day moving average, I say, has been broken. Now the question is, do we break the Feb low? I think we do. Feb low is at 119.50, so a break below here will be the next sell signal. We've got a low today at 119.50, so just holding it at the moment. But if you're not short already, if you were not following me on the updates throughout the day, then you can look to celebrate below 119.50 today. And again, I think this is the beginning of a bear trend, really. Probably slightly more established, if anything, than the Aussie and the Kiwi. Cable, which has been in such a powerful bull trend for such a significant period of time, had the negative candle on the weekly chart there. So it looks like, as I warned, that trend is unreversible on the weekly chart. You see down at the bottom of the stochastic. Big negative again, although that's not so clear when you look at the daily chart, but when you look at the hourly chart, this, I could argue, is some sort of head and shoulders topping pattern. Only a small shoulder on the left, big head, and then possibly a right shoulder. I know it's slightly awkward, so maybe it is, maybe it isn't. You never quite know with head and shoulders patterns, but that's my argument anyway. This would be the neckline, so we're just sitting right on the neckline as I speak now, 138.66. So a break below 138.60 should be the sell signal. Let's see if that happens. Obviously, we've had quite a decent consolidation pattern here, just trading sideways. So that alone would be a break in the consolidation pattern. We'll see what happens, but you can see, at least on an hourly basis, we're trading below the 100, 200, and 500-day moving averages. So that in itself is quite significant. I would say the big level to watch today would be 138.20. You've got a decent trend line, a couple of months old, 3 months old, is it? And what would be a decent, significant Fibonacci support level, 138.20 as well. So that's our big support level for today. If we were to close the week below that, that would be a sell signal for next week, although it's quite way down, isn't it? So for today, if it was testing, not be at all surprised to see us bounce off there. Now, dollar versus Canadian has not seen the break higher yet. We are still holding the trend line, which goes back to beginning of November, 1, 2, 3, 4 months old. That trend line comes in at 126.94 today. You can see that it stays high at 693. We've got 50 moving average at 127. Above there would be a buy signal. I'm just going to show you something on the 4-hour chart. I like the 4-hour chart for signals. Okay, so there we go. There's that November trend line, which has held so well. There's the 200 period moving average on the 4-hour chart, which is at around 126.97, I do believe. And you can see we're just holding it all. So if you're going to put a buy stop order in, I suppose 127.10 would be the safest place to put that. We would have cleared this stuff on the 4-hour chart, and we would have cleared 127.07 on the daily chart. But this is an opportunity, really, because whilst other markets have broken lower, this one really hasn't tested the high from Friday, still sort of consolidating. So hopefully when this does go, it'll catch up with the other markets, and we'll see the dollar significantly improve against the Canadian dollar. I've been feeling pretty negative about the NASDAQ for quite a while. We were building head and shoulders patterns all over the place, so I'm quite pleased with the analysis on that one. Just having a quick look at the weekly chart. Around 12,200, 12,150 is the next support level, Fibonacci wise at least. But there's nothing else really around there to support that. So let's see what happens there. That's the key level for today anyway, in terms of support. We broke the 100-day moving average at, well, I had it yesterday at 550, 500. We broke that, and then we did actually bounce back to 12,500. I managed to just sell into a small short position because I didn't have anything on. So I think that it's worth holding. Look at that. That was Jan low at 12,491. So getting short at 12,500 worked. Yeah, I'm still very small short that position. I do think this will continue to go down. This is probably the beginning of a short-term bear trend anyway. Let's see what happens at around 12,200, 150. A weekly close below there would certainly be a sell signal for the start of next week. That is today's main support level. If we were to bounce, then I would suggest that 12,500, 600 is the main resistance of the day. We certainly would have to close above 12,660 tonight for me to be more positive for the start of next week. That is the February low. EMINI-SP, not easy to trade. Over the last few days, I got chopped around. I had quite a negative outlook for this, and I was short for a while, and then I got stopped. I think that was Friday, and then I just haven't bothered to play it this week, which obviously I should have done because we've dropped Tuesday, Wednesday, and Thursday. Now we've broken a good support level, 37.85. We've got a really nice trend line going back to March, and that fib level there, and it was a low down here, 37.85 at the end of the previous week. So I think that the fact we've broken that is quite significant. If we were to get anywhere near 37.85 today, that would be a selling opportunity. But this, again, has broken lower. Looks like we will go to 36.70 area, which is this little low down here, 36.85, 100-day moving average, which is rising slowly. So that'll be more around 36.85 by the time we hit it. So let's call that level 36.85, 36.75. Break below 36.70 would then be the next sell signal. What's the January low? 36.52, a little bit further down. Okay, so that's the level to watch. I would suggest that selling it around 37.85, looking for a 100-point dip to 36.85 would be the trade to look for. So US markets look to be trending lower, but a quick look at the DAX, and that shows us that the DAX is not reacting at all. That, I must admit, the European markets seem to have been completely detached from the US markets lately, so that may be not a surprise. So we'll leave that one alone. Okay, I hope that's helpful. Do fire questions at me if you have them. I'm going to crack on with the reports now, and they'll be ready in a couple of hours.